what we're going to be looking at here is calculating a weighted average here for the number of common stock shares outstanding, and we're going to also be restating the weighted average here from year to year. And there's going to be no dilutive securities here in our calculations. It's going to be for the common stock only. So this is our example here. Corporation A has these common stock activities. Again, no dilutive securities, and they do the reporting here on a calendar year basis for their financial reporting. So this is what we're going to be looking at. We're going to be looking at stock dividends here. We're going to also look at some stock issued, and we're going to look at stock splits here. And we're going to be looking at how we'd restate these here from year to year and for the current year here when we're going to be calculating the weighted average here for the equivalent shares that are outstanding here for each year here. And really what we're going to be looking at is the comparison here will be stock issued here versus stock dividends and stock splits and how they're handled. So this is our example here. Dates. We're going to have a beginning balance. We'll look at our share changes here and our shares outstanding for each of these periods here, and then we've got our dates over here. So we're going to start with our beginning balance, and that would be the beginning balance here of the second year, but we're bringing it in here from 12/31 becomes the beginning balance here for year X2 here. So shares outstanding, well, we can go through all the numbers here, but there's 2,400,000 here. And then into X2 here comes September 30th here, 9 months into the year here in X2, there's going to be a 10% stock dividend. So 10% of what we have outstanding here would be 240,000. 10% of the 2,400,000 here. So we're going to have total number of shares outstanding here on 9/30/X2, 2,640,000, the sum total of those here. And that's what we're going to have up to the end of the year here and into the beginning of the next year here until we get into the third year here on 3/31, March 31st here of the third year. We're going to have some stock issued here. Company's going to issue 2 million shares here. So after this stock issue here on 3/31 X3 here, well, we have the sum total here of what we had at the beginning of the year, or what we had up until that point here, 2,640,000 plus the 2 million here gives us 4,640,000 here. Okay, so that's from the end of March here, X3, and that's going to go up until we'll have those number of shares outstanding here until we get to the next. We're going to have some stock splits here on 3/31 X4 here. We're going to have a 2-for-1 stock split. So we had this number of shares outstanding here up until that point, and that would go into the end of the third year here and into the first 3 months here, or the beginning here of the fourth year here. So with the stock split, we just take 2 times what we had outstanding here, and that equates to 9,280,000 shares. So that's what we're going to have here from 3/31 X4 to the end of the year here, X4 here. Okay, so what we have to deal with here, when we have those stock dividends or stock splits, when they occur, we're going to need to restate the shares outstanding before the stock dividend or the stock split, and we'll look at that. We're going to have to restate whatever we had up until those stock splits or stock dividends. They have to be adjusted accordingly here. Now, what we're going to be doing here is, based on these stock activities, we're going to calculate the weighted average here of common stock for each year, and we're also going to have to restate the weighted average here from year to year. Okay, so let's go up and look at our example here. Again, we're going to be calculating and restating the weighted average here for the number of shares of common stock outstanding, and we'll look at it from year 20X2 here through 20X4. And for our key here, or on what we're going to be looking at our charts, I just got it laid out here. A represents the beginning balance. B here is after the 10% stock dividend here. C is the 2 million stock shares issued here, and D you can use as would be after the 2-for-1 stock split here. Okay, so when we're working with this, what we have to do here, let's move down to our table here. So what we have to do here is we have to determine the equivalent shares outstanding each year here, and we're going to be looking at those 3 years here, 20X2 through 20X4 here. And what we have to do is we're going to be determining that based on the weighted average and number of shares here outstanding. So that's our goal here. And the other thing is we're going to have to do that for, we'll use as what we have to do that is for each of the years here, from year to year, and also for the year here. So how we do that is we have to set up our determine the dates that we have a certain number of shares outstanding here. So this is what we have to do. We have to determine the number of shares outstanding, and then in the case of stock dividends and stock splits, we have to restate them. We have to adjust them for those stock dividends and stock splits here, and then the fraction a year, we have to know the fraction a year that those shares are outstanding. That's based on our dates here that we have. And you take A, your shares outstanding, times B here, how you restate them, how you adjust them here, times the fraction of the year they're outstanding, and that's going to give us our weighted shares here. A times B times C. Okay, so let's start, and then we'll look at the first case here. We're going to look at the weighted average here of our common stock here in 20x2 and how it should be stated on comparative financial statements here for 20x3 here. So this is what we have here. So again, I'm going to have the years here. I'll have the particular year we're looking at. In this case, we're starting with 20x2, and then we'll look at the dates that are outstanding. So let's start in here, and then we're going to go back and we're going to use that original table that we did for reference. So just watch it here. So dates outstanding. Well, for the first 9 months here, we have shares outstanding here of 2,400,000, and then we're going to restate them for the 10% dividend. We have to increase these shares outstanding here by that 1.1 or that 10% dividend rate, and it's going to be for the fraction of years. Fractional years, and then we're going to have here a stock dividend here. And that's going to be for the last 3 months of the years here. So maybe what we should do is let's go back into our table here and look at this A and B here. The beginning balance and then our stock dividend. So let's go down here and look at those. Okay, so going back to this table here. Well, we had that beginning balance here of 2,400,000. Then 930 here, 9 months into the year here in X2, we have the 10% stock dividend. That's for 240,000. So we have a total of 2,640,000 outstanding here from 930 till the end, well, after 930 X2 here. So that's what we're dealing with here. We're going to look at A, the beginning balance, and B here after the 10% stock dividend. Okay, so let's go back up to our table here. Okay, so here we're sitting here. For the first 9 months, we have that A, 2,400,000 times the increase here for the dividend rate, 1.1, fraction of years that it's outstanding here. So 9, it's from 1/1 till or 9/12 of the year or 9 months, we have to restate those shares that we have outstanding, and multiplying that out, it's equivalent to 1,980,000. Now we come and we look at the last 3 months of the year here after the stock dividend. So we figured out the number of shares here after the stock dividends, easy enough, and then take that times we're really not restating it, I'm just using it as a multiplier of 1 here, but they're outstanding here for the last 3 months of the year. So 3/12 of that 2,640,000 is going to give us the weighted number of shares here for the 3-month period of 660,000. Okay, so now to determine our weighted average here for common stock here for 20x2, how it should be reported on the 20x3 financial statements. Just the sum total of that weighted average, we come up with 2,640,000. So, okay, that answers that question here. Now, let's move down here to 20x3. And we're going to look at the case here again. We're going to look at the weighted average here for 20x3. What the common stock 20x3 here weighted average should be reported here on the 20x3 financial statements. We're just looking at year 20x3 here. Okay, so that's based on the fact here we're going to have a stock issued in this case here, but we're going to start with this first period. It's going to be issued here at the 3/31. We'll go back and look at that here. But for the first 3 months here, 1/1 through 3/31, all we do is we bring in the weighted average here at the end of the second year, that end of the second year here. We bring it down here in the beginning of the third year. Those first 3 months here to third year here, that we put in here. It doesn't really get restated because there's nothing. We don't restate it. The stock issued here is not going to affect any restating of that. So that amount here times, and it's outstanding for the fraction of the year here, 3/12 of the year. That's equal to 660,000. Okay, so now we have to deal with the next 9 months here. It's 9 months of the year, and that with C here. We'll go back and look at it. This is going to be those 2,000 shares of stock issued. So let's go back and look at that right now here. Okay, so going back to our table here. This is what we're going to be concentrating. The stock issued. There's going to be 2 million shares here issued on 331X3 here, and that means that it's going to be 9 months sitting in, up to the end of the year here. From 331X3, we're going to have this. So we started out with 2,640,000. We're going to add in this stock issued here of 2 million shares. So we come up with 4,640,000 shares here. So that's from 331X3 through the end of the year here up until 331X4. We're going to have those number of shares outstanding here. So let's go back and look at it again. Okay, so we're back to our calculating our equivalent shares here again. So again, we looked at that. See here, that was the stock issued. After the stock issue, we have 4,640,000 here, and that's for that 9-month period here, and it really doesn't get restated. When we have these stock issues here, we don't have to restate anything, any previous amount. We just brought that in from the previous year. But you can see how it builds on it here. You have to start in, when you start out for that first 3-month period, that comes in from the previous year's weighted average. So for the last 9 months here, 9/12 times what we have here after that stock issue here, 9/12 of that here equals to 3,480,000 shares. So now our weighted average here, common stock for 20X3 on the 20X3 financial statement. So here we're just looking, we're just looking at the 20X3. So total those amounts up, you're going to get 4,140,000 weighted average shares, or equivalent number of shares outstanding here for the year 20X3 here. 20X3 on the 20X3 financial statements. Okay, so now let's move down here, and we're going to look at the weighted average of common stock 20X3, how year 20X3 should be reported here in the 20X4 financial statements. Okay, so now this is the case here where we're going to actually have a 2-for-1 stock split, and we'll look at that here. And this is the case here. Whenever you have those stock splits, you have to, they affect the whole year. If it, whatever time of the year it is, it affects the whole year here. And again, we're going to be looking at 20X3 common stock here, weighted average here, how it will be reported here on the 20X4 financial statement. So here's what we do. We can go back down and look at that here. And that's going to be for our total year here, 20X4 we're looking at here. So okay, so let's go back and look at that here. All right, so here's where we're sitting here. At the end of, before that, we're going to have the stock split here in 331X4 here. 2-for-1 stock split. So what we have up to that point here, after the stock issued and that stock dividend, we had 4,640,000, twice that. So now we're going to come up with the stock split here of 9,280,000. So that's the shares that we're going to be looking at here. Total outstanding here after the stock split, after these based at what was issued here, and with that 10% stock dividend. So we'll be looking at that. So let's go back and look at our table here. So what we do here, back to this one here, maybe I've gone ahead of myself a little bit here, but for year X4 here, again, weighted common stock for how 20X3 should be rated on 20X4. So we take our 20X3 amount here of 4,140,000. So that's the 20X3 weighted average. We had the 2-for-1 stock split, so we got to restate that here. Whenever it happened for the whole year, it has to be restated. So twice times our restating fraction, twice here because there was a 2-for-1 stock split, times what we brought in here, weighted average from 20X3, the total year here, 12 of the 12 months, we come up with 8,280,000 shares here. Okay, so that's looking at how we'd restate here at 20X3 here on the 20X4 financial statements. Now, let's look at our final entries here. And we can go back to our table again here. And one other thing here. The reason I looked at this 20X3 to 20X4 is that after 20X4, we had we're going to have 9,280,000 here shares here after the 20X4 split. But when we're looking at this 20X3 date here, we had to, we just couldn't go out, and we had to take whatever comes in off 20X3 here date, we had to adjust that for the stock split here, just not to be confusing. So we ended up with this with the standard number of shares outstanding here 20X3, how they'd be reported here in the 20X4 financial statement. Okay, so now we're going to move down here and we're going to look at the weighted average here, how we'd report the common stock here at 20X4 on the 20X4 financial statement. So what we want to do here for the first 3 months of the year here, what we have is we'll go back and look at that here. It's 4,640,000. There's no adjustment here to restate it, but that's outstanding here for the 3 months here. So 3/12 of the year, we're going to get 1,160,000 shares here. But then we have to adjust that for the stock split. Twice that number here times our stock split here, the 2-for-1 stock split here. And the adjusted amount here for this first 3 months is 2,320,000 shares here. So that's the equivalent shares outstanding here, the weighted shares outstanding. So we've made our adjustments here, and we can go back and look at that. So that was for that 1/1 through 3/31 time period. So now we're going to get down into, and we'll look at here this C figure here, which is the after the 2,000 shares of additional stocks are issued here, and then we'll look at this D here for what we're looking at with the stocks. But we'll go back to our chart here. So for the next 9 months here, 9/12 of the year, from 4/1 to 12/31, this is where we have our stock split here. That was after that stock split, that 9,280,000. The adjustment factor is just 1 here. We really don't adjust it. So 9/12 of the year, we're going to come up with 6,960,000. So we've adjusted here that after the stock was issued here, we got the equivalent here of 2,320,000 plus our 6,960,000 here. So we're going to have the weighted average here, common stock for 20X4 here, for the 20X4 financial statement. So here we're just looking at 20X4. Total amount here, 9,280,000. So let's go back and look at those numbers again here, C and D, just for a reference here. So all right, so now we've gone back here to our other chart here. So this is the idea here. On 3/31X3, we have the stock issued here, 2 million shares here. So after that date, we got 4,640,000 shares. So that's going to be what we were looking at for that's up through the end of the year, up until this stock split here in 3/31X4. So this is what we were looking at in our calculation here, and that that's the number of shares here outstanding for those first 3 months of the year here in X4. And then on 3/31X4, the end of the 3rd month here, we have the stock split here, 2-for-1, so twice those number of shares. That's what we have, 9,280,000 here. And that's for from 3/31X4 through the end of the year here. Okay, so that takes care of that. So let's go down here just one other time here looking at this stock split here. Just to sum everything up here, again, so I didn't want to confuse here things for 20X4, what we would report for the 20X4 on the 20X4 financial statement. So again, that was after those stock was issued here, and that was for the first 3 months of the year here. 3/12 of that equals that, and then we had to adjust that. And that's our adjusted amount here, and that would be for 1/1 through 3/31, the first 3 months of the year. We got that. That was our adjustment based on that stock split here. We got those numbers, and then for the last 3 months or 9/12 of the years here, we had it after the stock split. Whatever that stock split was, 9/12, so that goes into our weighted average there. So then our weighted average for 20X4 on the 20X4 financial statements is that $9,280,000. So this is how you go about. And let's just go back up here. So this is about how you have to determine the equivalent number of shares outstanding, and we do it based on this weighted average here. So you have to determine the year you're looking at here, the dates outstanding, which really gives you the fraction a year here that you have to calculate using your calculation. Then you have to determine the number of shares outstanding for that particular date, depending on, and they have to be adjusted for any stock splits or stock dividends. They have to be brought back here to the what they would be, what number of shares here before the stock split or deducts dividends. You have to figure that out, and then based on multiplying your shares outstanding times whatever how you restate them here, that factor times the fraction of the year they're outstanding, that gives you the weighted shares here for that particular period. And then you just keep on looking at whatever period you're looking at, fraction of the year here, you have to determine the shares outstanding here, and then you take it times any restating and fractional amount to determine the total. Then you just sum everything up to determine the total weighted shares here for the year. And then just remember, if you're looking at this is adjustments that you'd have to make from year to year here, and we went through that. So just go through the numbers here and figure out where your adjustments have to be made.